FX Nation, what's up, guys? Welcome back to Forex U in the advanced course, and welcome back to another video, guys. So, in this week's video, or in this episode, or in this volume, what we're going to go ahead and talk about and break down is, let's go ahead and talk about swing trading. All right, so let's get into swing trading, and essentially, we're going to talk about how you can go from trading intraday to essentially swing trading. Okay, because right now you're basically trading the market maker strategy in an intraday setting, right? So you're trading intraday, meaning that you get in and out of a trade essentially the same day. Okay, so swing trading starts to basically introduce concepts of where you can potentially hold trades for longer than one day. Okay, and so instead of holding trades for just one day, now you're holding trades for potentially 2 or 3 days. Okay, so let's go ahead and get into this swing trading, and let's talk about some of the differences really between intraday and swing trading, so you can get a better understanding of what's going on here. So when we talk about intraday versus swing trading, a couple things to consider. The first thing is you're going to need a bigger stop loss when you're swing trading. Also, because you're using a bigger stop loss, your reward, it also becomes bigger. So stop losses typically are about well over 30 pips, and then reward is over 60 pips per trade. Okay, so not trading, you're essentially, when you're intraday trading, as you know, we're trading basically the high and the low of the day. When you start to integrate swing trading into your trading strategy, you're basically, now the easiest way to do it is basically trading, instead of the high and the low of the day, you're basically trading the high and the low of the week. Okay, that's essentially how you start to incorporate swing trading into this strategy. All right, so what are essentially the best ways that you can potentially start this, right? When we talk about levels, cycles, and everything that we do now with the current strategy. Well, I strongly believe that if you're going to start this out, there's a couple things that I think you should do. So on the swing trading progression, you're going to start with basically trading low of the week, high of the week trading, right? So essentially what that means is the only way that you're going to get possible lows of the week, highs of the week trading and actually do any kind of swing trading is to trade basically 3 things. One is trending cycles, right? So you can basically trend with a cycle for that week, and that'll give you possibly 2 to 3 days of one movement in one direction, right, on a trending cycle. When we talk about swing trading on a market maker cycle, basically you essentially have 2 trade setups that you can potentially get with the market maker cycle. So the first is going to be basically the Tuesday reversal, right? So this is when you have essentially let's say a false move Sunday, Monday, and then on Tuesday you have that reversal that goes the complete opposite way, and it basically goes the opposite way the entire day. New York and London, and also New York, right? So typically, like in New York, you'll get like a continuation trade basically. So you'll see a big move happen in London from 7 to 8. It'll come down towards like the middle. So you're not, at the high or at the low. So you're pretty much getting a continuation trade at that point. So, but you get a full day's reversal essentially on Tuesday. All right. And then basically the second part of that market maker cycle is going to be the midweek reversal, right? Whether that happens on Wednesday or Thursday. And then essentially you're holding, those trades for 2 days, the opposite direction. So if, let's say, if you had a false move Sunday, Monday, your Tuesday trade would be basically a rise for that entire day. And then your midweek reversal would basically be, let's say, a drop on Thursday and a drop on Friday. Or if the midweek reversal happens, let's say on Wednesday, then you would be basically Wednesday, Thursday, and then Friday. Okay, so it all depends obviously on what day the midweek reversal happens. But those two cycles will essentially get you into swing trading, where you can start to take baby steps essentially into getting introduced into swing trading. Now, one of the biggest challenges I think that you're going to have when you go from an intraday trading to a swing trading type of mentality is that you have to understand that you're holding these trades for multiple days, right? So because you're holding these trades for multiple days, you have to understand that there's going to be pullbacks that happened. And a lot of times as retail traders, you end up basically getting suckered into taking profit too early because of the pullbacks that basically freak you out when you're in a swing trade, when you're trying to swing trade. Okay, so a prime example of this would be, let's say if you take a swing trade and you're up, let's say 100 pips, and the pullback comes, and instead of being in profit 100 pips, now you're in profit maybe 20 pips. And so as soon as you see that, your emotions start to kick in, your psychology starts to kick in, and really you start to get emotional about the trade. And you start to think about, what am I going to do about the situation, right? And so you start overthinking the trade. You start overthinking everything about the trade setup itself. And essentially you end up getting out, let's say at a 20 pip profit, when, maybe a couple of hours later, that pullback was over and it would continue back in your direction for another, let's say 150 pip move or something like that, So the psychology behind it and the emotional parts that come with swing trading are huge, and they are going to be an obstacle for you when you first start swing trading. It's just going to happen. It's just natural for it to happen because you're not used to basically being up 100 pips on one trade, and then all of a sudden you get taken out, 80 pips out of your position, and you've never seen that before, and so you panic and you freak out and you start to overthink everything about the trade, everything about the trade setup, and you start to overanalyze what's going on in the charts. So just like with anything, just like with, intraday trading, just like trading the strategy, it's going to take time to get adjusted to it, number one. And also, I believe the more that you backtest, again, is going to help you improve what you're seeing, how you're seeing it, and actually make you not worry about the pullbacks that are going to come, because pullbacks are going to happen. You can't have a trend or a swing trade going in one direction for 2 or 3 days without having a pullback. Okay? And those pullbacks may come, very small. It may come with those, Asian ranges that are maybe 30 pips. It may come with those Asian ranges that are 70, 80 pips. Who knows? Right? But you have to be prepared for that in advance. And you can't be afraid of the pullbacks. You just can't be afraid of them. All right? And so the last part that you're going to use to swing trade is levels. So when we talk about levels, we talk about peak formation high, level 1, 2, 3, and then peak formation low, right? So these levels, since you can see them pretty much on any time frame, right, it allows you basically to swing trade at any time frame, right? And so when you want to use levels to swing trade, you're definitely going to be using the higher time frame. So like the hour, the 4-hour chart. And so I'm going to show you the different ways essentially that you can incorporate swing trading into what you're doing now. Okay. So first, we're going to talk about the first part, which is basically going to be swing trading with trending cycles. Okay, so let's break down swing trading with trending cycles and how you can start to incorporate this type of behavior into your intraday trading that you already do using the market maker method. All right, so let's hop over to the charts and we'll go over the trending cycles. Swing trading, the trending cycles. All right, guys, so now that we're in the charts, what I'm going to do is I'm going to show you essentially how you can start to incorporate swing trading into what you already do. Okay, so I'm going to show it to you from a 15-minute chart. That way you can see that you don't have to change too many of your behaviors that you're already doing now with the strategy that you already know and that you've already been doing. Okay, so I'm going to show it to you in a 15-minute time frame so you can see how you can start to incorporate it into what you're doing now. So let's start this week by just what we do, right? Sunday, Monday, what happened? Let's use Sunday, Monday as like a data collection day, right? And so Sunday, Monday, you see that we basically did pretty much nothing, moved completely sideways, right? So as we start to go ahead and get the week started here and we start to go into Tuesday, all right, we can see where the EMAs are, okay? And as we go along through here, you'll start to see how we dip below the 200 EMA. Okay, so that's a big clue right there. We start to dip below the 200 EMA. Okay, and keep in mind also about your low of the day from the previous day, because that's going to play a huge part in you deciding when to enter a trade. So far we have nothing here. Okay, we can see that basically we have price action that's right now going up into the middle of the range and then at the 50. Okay, and then here we go. Here's the rejection essentially that's happening at the 50. Now look at the price action behavior that's actually happening right here. As we're essentially, what are we doing? We're basically trading in between the 50 and the 200, which is also where the middle of the range is, right? So you see this behavior. Now, as soon as that behavior is broken, okay, as soon as that behavior is broken, there's now obviously a setup, which is a type 3 setup. Okay, so this should become very obvious to you. This behavior here from the previous day, this big spike up, move down like this. This right here should be a big clue to you, and that's obviously peak formation high. Okay, so as this moves down, you're going to see how it moves away from between the 200 and the 50, right? So that essentially gives you an opportunity to have a setup for sell, a type 3 sell. All right. So if you're going to try to swing trade this, okay, what is your optimal targets, at this particular juncture? Let's say you first start out with your normal, let's say 30 pip 2-to-1 ratio, right? So you can go down to, like, let's just do 30 pips and 60 pips. So let's do 30 pips to start with. And then a 2-to-1 is probably just right here. And this is, again, just something to get you started with, right? That's all it is. Just something to get you started with and something to get you thinking into the trade. Now, on a 15-minute time frame, also, these behaviors here, this movement like this, is something that's actually spotted very well on a 15-minute chart when it gets to being a peak formation high or a peak formation low. All right. But let's go ahead and play this out. And so you can see what happens as this starts to move, right? We broke the low Sunday, Monday. So that we're not accumulating at all, right? We're not accumulating at all. We have now the bigger EMAs above us. Okay, we made a huge sharp move all the way down. So now we go into the next day, and here's where you get the pullback, right? Is the Asian session. Here's where you get the pullback. All the way back up to the 200, pins to the 200, right? There's another pin right here. And then you can see you basically get another M the next day. You see that? You get another M there. But you're still holding on to this trade. You're still holding on to this trade. Now we're going into Thursday. What happens on Thursday? Look. On Thursday, what do you end up getting? A type 3 setup, right? You're still holding on to that trade. And look, Thursday you get another setup. You just keep holding it. Look, the whole day down, straight down. Here's Friday. Here comes the pullback. And what do you get on Friday? Another type 1 setup for sell. You can see it keeps going down, 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 down. So that entire week, was one big trending cycle. Okay? And you started it on a 15-minute chart just by doing what you normally do now anyways. The only difference is that you're just identifying trending cycles and you're essentially just holding the trade instead of getting out on 30 pips. You're holding the trade. That's the only difference that you're doing, is just holding the trade here. Okay? So how do you manage, let's say, a trade like this, right? So after you get 30 pips on the first run here, okay, or this is 60 actually. So after you get 60 and you've already moved on to the next day, the first thing you want to do is you want to put yourself at break even, right? To make it a trade that no matter what, you won't lose any money on. right? So let's say you put it into profit, I don't know, 20 pips or so. So you put in the profit 20 pips, which is probably like, let's say around here. All right. And then you hold it. And then after the next day, after Wednesday, that it drops again, right? After Wednesday dropping again, what do you think you're going to do? You're going to go ahead and continue to drop your stop loss. Thursday, you see a type 3, it continues to drop. As soon as that drop happens, boom, you're already at the high of Asia on Thursday. As this continues to drop, and then Friday you get this type 1, I mean, you're already down here with your stop loss. Okay? And I wouldn't, to start with, I wouldn't hold it over the weekend. Just get out of the trade on Friday. If this is how it develops, okay, and obviously they're not going to be like this. I'm just giving an example of how you would handle the trade setup. I mean, the trade setup, you would get into the trade setup solely based on what you're doing now already. The only difference is that you're just holding it longer. That's it. All right. So let's go ahead and see the next week here. And let's take a look what happens. So here's Sunday, Monday of the next week. Okay. Keep in mind this is we're already at previous week's low, obviously, from this low of Friday. You can see what's happening here where price, again, you're not changing anything that you're doing now, comes out of the middle, comes down to the bottom, goes up to the top, meets the middle of the range along with the 50. Along with the 50 there. Do you see that? And what happens? It ends up getting stuck. Do you see that? So this ends up being basically a type 3 setup here. You have a setup for a type 3 because it's getting rejected again by the 50 here. You see that? Right here, there's another clue for you. Rejected by the 50 in the middle of the range. So you should know that this is just going to continue its behavior of moving down. Look, there it goes. You see that? So now we get into Tuesday. Well, Tuesday, what are you expecting? If it's going to be a trending cycle, this needs to break previous day's low and create what? A lower low, right? That needs to happen. Look, do you see how this one came down? This one came straight down from the Asian range, gave one leg up to the bottom, and then immediately went straight back down. That's the signature move of what? A type 4 setup, right? And so this trend, because we're already dropped below the low of yesterday, like this is just going to be another trending cycle. The only other thing that it could be would be a market maker cycle, but then basically you would have on Wednesday a huge reversal, right? Or movement sideways, or a type 1 setup. You don't even get that look. It just keeps going down. And it keeps going down. You get into Thursday. What happens on Thursday? Now look what happens on Thursday. Thursday is the first day that essentially does not break the low of the previous day. Obviously, you cannot be in a trend if you're not continuing to create lower lows. So if you're not able to create new lower lows, that trend is no longer there. And now you're basically either consolidating or doing something completely different. Okay? So if you see that type of behavior here, where you're no longer breaking previous lows and you're not creating lower lows, then that is a exit trigger. Because the whole point of you swing trading is to continue the trend, but you have to keep continuing to create lower lows, lower highs, lower lows, lower highs. Okay, the fact that we didn't do that on this day gives you a clue as to what's happening. But regardless, this trade here, you're looking at 1, 2, 3 days of drop. 3 days of drop in one direction. That's still a swing trade. That's still about 700 pips. Like, come on, you know? That's still 700 pips right there. Okay? So as we play this out here, you can see that now we've really established like a low, meaning like a low that's not creating lower lows, right? So this basically could mean one of two things, either consolidation or really a change of trend. Okay? And so this is Friday, obviously, so we're basically setting up for the next week at this point, you know? And you can see by the movement going all the way up and then coming all the way back down to that same area. Okay? And so now, Monday of the next day, what do you end up getting? Pretty much a sideways movement is what you end up getting. You end up getting a type 2 here, but it happens super early. You do get an entry here because you have a pullback here after the cross right here. You get this pullback candle, and you actually get another one too as well. So the entry is not really that bad at all, anywhere from here. And this goes down about 145 pips. Okay? And if that wasn't enough, you basically get a continuation trade in the US session here when you have pins to the 200. And you get an M formation here. Do you see that? And you go straight down. So that's the trade right there. But how do we determine if we're going to get any more swing trades, right? So if we're here now, if we're starting the week, what are we looking for? What's the first thing that we're looking for? Is, are we taking out Sunday, Monday's highs, right? Because if we're going to trend something, we need to make either a higher high to go higher or a lower high to go lower, right? So we need to break out of this, out of either the low or the high. One of these two things got to go. We don't want to be try to swing trade when we're doing a ranging market. That doesn't make any sense for you to try to do. So as we're waiting, you can see, boom, what happens. You see that? You see how the price gets rejected off the 50, like that? That right there should tell you you're in a trending market. You're starting of a trending market because you're already above the high of yesterday. So you're trading above that. And you can see it. Like there's no, there's like literally no if and or doubts about it. You can see it, So the question is, can we get into buys, right? So how do you get into a buy? Well, I mean, you look for buy setup, essentially, is what you're doing. You look for buy setup. You know, do you have anything to have a buy setup? You move strongly down on a type 1 setup down, and then at the end here, it reverses. Do you see that? It reverses all the way back up, because it's not going to go down, it's going to go up, right? So this is, let's say, Thursday now. And so here, there's our opportunity right here. You see how price goes up, makes an M, comes back down, gets rejected off the 50 in the middle of the range here, and then goes right back up. That's a type 3 there. Okay? That's a type 3. So what is your stop loss here and your take profit? Well, if we're going to go 2 to 1, we need to go at least up to here, right? This will basically allow us to, it's going to continue to go up higher. We should continue to go up higher if we're making basically higher highs, right? We just made a higher low here. Now we need to break this high to go up higher. Okay? So let's do this right here, and let's see what happens. So there you go. You keep going higher, and the next day there's your pullback that you would expect during, you know, the Asian session there. And the next day is basically Friday. It's the same thing. There's your pullback here. And you keep going, keep going, keep going. And you can see it ends all the way up here. So in a two-day trade here, you basically went from, this is about 400 or 500 pips. 500 pips in a day and a half. 500 pips in a day and a half, just by identifying when you are in a trending cycle. And even look, even if you get into this, you can see even if you get into this on Thursday, you can still grab a ridiculous amount of pips, even if you get into it on Thursday. So what happens this next week here? So Sunday, Monday, you can see we pretty much go sideways. What happens Tuesday? Pay attention. Do we break the lows of Sunday, Monday? No, we don't. Look. We don't break the lows of Sunday, Monday. You see that? We don't break those lows, and we don't break the highs either. We don't break the lows. We don't break the highs. All right? We didn't have a full day of up direction in one day, so we know it's not a market maker cycle, right? We're likely going to be in an accumulation cycle. Okay, so obviously if you're swing trading, this is not a cycle that you want to be in. But you can look and see where the accumulation cycle is basically not doing anything. It just moves sideways, right? It's respecting the entire high and the entire low that it was initially set up on Sunday, Monday. Okay, Friday is a day where they set up for the next week, and then here is the move that breaks basically this this low that was created here Sunday, Monday, Tuesday. You see it basically treads below that to basically break and set up for the next week's cycle. Okay, so if we just had a trending cycle, accumulation cycle, now what are we going to get this week? Let's see. So Sunday, Monday, there's Sunday, Monday right here. All right, so basically what? Sideways movement, right? Again, sideways movement, Sunday, Monday. Here's that high. Here's that low. What are we going to do? What are we going to find? Let's see. Here's the Asian range. Look. Look at the behavior here. Why would price go up here to the top, come back down and get rejected? Look what's here. The 50 and the 200 is here getting rejected. Okay. The 50 and the 200 is stopping price from going any lower, so it can't go to the middle of the range to be a type, like a good type 3 setup, right? But you see the behavior that's there, and that's what matters, is the behavior. If you can spot the behavior, what's going on, that matters. That plays a huge part into what's happening, right? So if you spot the behavior, this could potentially be a trade setup for you to get into a trade. But we're still not breaking the high that was originally set on Sunday, Monday. So ideally, not the best setup, but the behavior is there. You can see the behavior is there. Let's see what happens. All right. You see how we're basically moving literally right above that line? Okay. We're literally moving right above that line. Pay attention to Wednesday, because you might get a setup on Wednesday. Let's see. Pay attention to how the 200 is basically riding below. It's basically riding below the Asian range. So I would expect, if this is going to be any kind of a trend, I'm expecting like a type 2 setup here because of where that 200 is. Look. You see? Boom, right here. Look, there's your type 2 setup there. Do you see that? There's your type 2 setup here. Set a target. Let's say you can make something easy. It doesn't have to be crazy difficult. You can go up to the high of yesterday just to start out with. This is just a starting point. Ideally, though, the bigger target is up here. So 162 pips, which is a previous week's high. And if we're going to be in a trending market, we're going to be easily able to get there. But let's take baby steps first. Let's not change the behavior that we've been doing so far that we know already. Okay. Boom. There's your first target hit already. Okay. Now let's see what happens. There. I mean, you're already trading obviously above the above Sunday, Monday's high, so you already know you're in a trending cycle. This is all now just about how long do you hold it for. This is Thursday, right? We're going into Thursday now. And then Friday. And if nothing has happened so far on Friday, look, end of the day, cut the trade, and you're done. So on this trade, using the setups that we already use anyways, it's a trade that goes about 160 pips. A trade that goes about 160 pips. That's pretty nice. Okay. So you can swing trade on a 15-minute chart just by using the cycles, by using the trending cycle, by identifying the trending cycle. You can see that we went through how many weeks? 4 weeks that we went through. And each of the weeks, we were able to identify the trending cycle based on what happened Sunday, Monday, high or low. When that broke, there you go. We were still able to get setups that we normally get anyways. This is not changing any of the setups. You're not learning any new setups. You already know the setups. The setups are the same. You're just basically grabbing the setups in the same time that you normally do anyways. You're just grabbing them and holding them. That's the only difference. But you have to identify that you're in a trending cycle. That's the biggest key when you start swing trading, is you want to be in the trending cycle. Okay? Those are the best cycles to obviously swing trade, because they go in one direction. And all you're doing is just holding. So the question really you got to have to ask yourself is, it may look great right now, right? When we're replaying this like this, it may look great, but can you actually hold those trades for several days without getting nervous, without getting emotional? You know what I mean? That's going to play the biggest part in this. Being able to identify the trend, a trending cycle, and then being able to stay in that trending cycle and not be scared. Those are going to be the biggest factors that you're going to have. So here's another one. This is a different pair, Euro JPY, Sunday, Monday. All right, we're coming off of what? Look at what we're coming off of the previous week. We're coming off of a trend going up and then a reversal. Do you see that? This is basically coming off of a market maker cycle. All right, so we're coming off of a market maker cycle. All right, big clues, Sunday, Monday right here. I mean, guess what? We just moved sideways again. Sideways movement. Okay, now pay attention again to the same thing. Highs, lows of Sunday, Monday. All right, because if we're going to be in any kind of a trend, those have to be broken first. If those aren't broken, guess what? You're not in a trend, right? So, as we play this out, do you see that? You've already broken the Sunday, Monday low. So guess what? You're more likely going to be in a trending cycle. Okay? The only other thing that I could be is a market maker cycle, because we did have one day of drop direct on Tuesday. But for that to be the case, look, I mean, come on. Look at the Asian range. Look, it just straight dropped. It just straight dropped. Look where it went up to. It went up to the previous Sunday, Monday low. Went right up to there and then dropped. I mean, come on. This here was a type 3 setup. Look, this was a type 3 setup right here on Tuesday. Do you see this? That was a type 3 setup on Tuesday. Went from the bottom to the top, got rejected, and then dropped. Pinned to the 50, to the middle of the range. You had the 200 right above you, so it wasn't going to let it get any higher. And then it just dropped. Get into Wednesday, and then it just drops. Literally, it goes up to the bottom, tags it, and then literally just drops. Look at that. Just drops. It literally just drops. Thursday. Pull back on Thursday. Drops again. Comes right back up. Do you see that? Drops and then comes right back up. And then Friday. Either going to get sideways movement or another drop. There you go. Sideways movement, close out, and you're done. So from a type 3 trade all the way up here, I mean, let's just say you got in late. I mean, you're still talking about well over 200 pips for, you know what, 2-3 days, 2.5. I mean, come on. I don't, that's a pretty good deal to me. Even if you get 60 out of it, I mean, you're still doing the same thing. You're still taking the same trade setups. You're not changing anything. But again, you're just letting them go. You're letting them go. Okay? You're literally letting them go. That's all that you're doing. So really nothing changes as far as the behavior that you're already doing. It doesn't change. All right? I think that's the easiest way to start swing trading, is using the trending cycles and then being able to identify the trending cycles on Tuesday, Wednesday, on the setups. You've seen pretty much every time that I've told you, every trending cycle that we've been able to see, there's been a trade setup that we've been able to get into, whether it's a type 1, 2, or 3. They're there. Okay? So use that to your advantage. Use it to your advantage. You already know what it is. So there should be no, issues. We're not trying to drastically change anything crazy here. We're still using the 15-minute chart. The only thing that you're doing is just identifying trending cycles. Okay? So that was swing trading using trending cycles. All right, so in the next video, we're going to break down using the market maker cycle, and then also the levels, on how we can use the levels. And I think the levels is going to be just higher time frame, so 1 hour, 4 hour time frame trading. The market maker cycle is essentially still on the 15-minute chart. Again, we're not trying to change anything. We're just adding something extra that you can do. But enable for you to actually do this, you have to have the discipline, you have to have the emotion, and you have to have the psychology stuff in check. Because if you don't have those in check, forget it. It's not going to work for you. Okay? Not to mention, backtesting plays a huge part in building your confidence in this trading, for trading anything. All right, guys. Thank you so much, and we'll see you in the next video.